You're listening to AI PRISM from Seoul Economic Daily.
It's Monday, May 18. I'd like to share some thoughts about Finance Daily. Specifically, you're going to hear about 3 structural disruptions simultaneously reshaping Korea's financial system right now. We're looking at a battle for blockchain infrastructure, a radical credit scoring reform, and a really high-stakes retail restructuring standoff.
Right, yeah. And, we should probably start with the stablecoin race, just to define it for everyone. A one stablecoin is basically a bank-issued blockchain digital currency, but it's pegged directly to the one.
Oh, right. And the pending Digital Asset Act is finally providing the legal framework for this, isn't it?
Exactly. So now we're seeing an absolute scramble.
It's wild. Like, Hana benchmarked JP Morgan's Connexus, which, by the way, has processed over $3 trillion US. Then KB is talking with Toss, the super app with 30 million users. And Shinhan is targeting a Samsung card partnership. I mean, they aren't just experimenting. They are racing to build the digital railroads of the future economy. But I have to ask, why is IBK Industrial Bank of Korea considered the ultimate swing asset here?
Well, it comes down to data. IBK holds 264.2 trillion won, so that's approximately 189 billion US, in SME loans. Their 24.4% market share provides transaction data that is just, well, invaluable for on-chain finance.
Wait, why is SME data so special? Like, why not just use retail data from Toss?
Because retail data is just too simple. You need corporate data, supply chains, invoicing, payroll, to really stress test these programmable money systems. But, IBK isn't just a passive prize in this race.
Right, they're using that massive market influence to challenge how lending risk itself is calculated.
Yeah, exactly. Since they're a government-owned policy bank, they can really push the envelope.
Because traditional Korean credit scores are so rigid, right? Like, they're very backward-looking.
They are. So IBK is shifting toward behavior-based pricing instead. They are literally cutting rates for borrowers who simply renew their loans without delinquency completely, regardless of their actual credit score.
Wait, really? Isn't it incredibly risky to ignore traditional credit scores when IBK's total loan delinquency rate just crept up to 0.95%?
It sounds super risky, yeah, but it actually aligns with the government's inclusive finance policies. If IBK can prove that default differences by score are insignificant for small loans, that reshapes Korea's entire corporate lending sector overnight.
Oh, wow. That's huge. But, getting risk wrong in Korea isn't just about financial loss, it's about legal survival, which leads perfectly into this whole Homeplus crisis.
Oh, definitely. So Homeplus needs DIP financing right now, which is just emergency credit during court receivership to keep the business running.
Right, and they need those DIP funds from Meritz. But Meritz is flat out refusing without a performance guarantee from MBK Partners, the private equity owner.
Yeah. And this highlights a uniquely Korean fiduciary risk. You see, retail investors holding Homeplus short-term commercial paper are threatening criminal complaints. Under Korean corporate law, executives actually face criminal charges for extending credit without adequate safeguards.
Wow. So Meritz is essentially paralyzed between saving a major retailer and avoiding jail.
Exactly. And that bottleneck leaves you with a really provocative thought to mull over. From digital currencies to distressed debt, the fundamental definition of a safe financial practice in Korea is being actively rewritten, which foreign observers must closely monitor.
That's today's AI PRISM Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Won IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.